I want to provide you some financial planning tips to thrive in your 40s. I'm in my mid 40s, so it's good for me to talk about this. This is when it's a pivotal time where you're heading into your higher income earning years. Maybe you're done having children at this point. And, in the beginning, when you're first starting out, it's like save as much as you can, right? Spend as little as you can. We're trying to get our bearings and all of that. And usually now is when we're settling into maturity, financial maturity, maybe maturity in our positions at work and things like that. And so this is a perfect time to assess if what you have done thus far has positioned you for the future, or if it hasn't, it's a great time to pivot as well. So the first thing I would say is seriously sitting down and looking at a financial plan to say, okay, here's the assets I have, here's what I've saved so far. Evaluate where you are and what you want for retirement. You may be 20 years from retirement, 30 years from retirement. And so positioning yourself and making sure you're on track for what you're trying to do is extremely important at this juncture. That's where you can look at expenses and evaluating where you're spending your money. There's no one set, you need to have this to retire. It depends how much you spend. So making sure that your cash flow analysis looks really good and that you're saving enough for what you want to spend. And this is the point where you can make any changes. It's also evaluating, your debt and how you're looking as far as having higher interest rate debt is not good for you long term. Trying to get that paid off, always having an emergency fund. We started that off hopefully when we were in our 20s and 30s, but just managing it very well now. And this is also a point where you may have kids going to college. My oldest is going to college now, and I'm 46. And so really, are you positioned well to help them through that? Hopefully we've been saving for college, but if we haven't, are we going to pay it out of cash flow, et cetera? And building that into the long-term plan to know that when you're going into these expenses, you're not hurting yourself long-term. As far as understanding what your goals are. And this is a big part where you understand where your goals are. Because you're heading into the higher income earning years, I would say this is really looking at the tax efficiency of your account. So hopefully you are deferring to your 401k. If you're not, always start as soon as possible. But if you have been deferring, this is probably the years where you're going to be deferring the max. Hopefully you can defer the maximum amount. This will save you the most tax to be able to defer to a pre-tax account in these higher income earning years. In addition to that, making sure that you're getting the match if your employer offers that to you, and maxing out those retirement savings on both sides for both spouses. That would be great. And if you have excess after that, this is where we can start an opportunistic fund where it's in a brokerage account, and we start looking at being tax efficient and start creating tax credits for future use. So there can be an opportunistic fund there as well, and positioning yourself that way, and hopefully working with a tax advisor to look at different ways that you can save taxes. In your portfolio, making sure that you're diversified. So this is also not only in your 401ks, any outside retirement accounts such as IRAs, and then the opportunistic or the brokerage accounts you have. This is usually the age sometimes where we have a lot of company stock built up because we've been working for one company and maybe we have a lot of stock. I've seen a lot of clients have Apple stock, for example, if they work for Apple. So this is a way, you want a good rule of thumb is not to have more than 10% in any one stock. A lot of us do at this age if we've worked for a larger employer and it's a publicly traded company. So looking at diversifying that. And just making sure that your portfolio is on track to return what it needs to return in order to meet your long-term goals by being diversified, and looking at that as well. And then planning for the unexpected. So in our 40s, if we haven't been kind to our bodies, this is kind of where, we may start seeing some health things. Statistically, we are more likely to become disabled than pass away. And so, taking care of your health first and foremost, but also making sure that you're life insurance is up to date. What life insurance do you need? Most of the time we solve that with term policies. Do you have enough if something were to happen to cover your family or your spouse or both, if something were to happen to you? But like I said, statistically, you're more likely to become disabled. Do you have enough disability to cover you so that your family doesn't have a long-term life change if something were to happen to you while you're not able to make those higher income earning years? And then finally, estate planning is critical. Even when you were younger, and especially when your babies were little, being able to leave money to them, making sure you have enough life insurance, but also making sure it's titled properly, and that there's guardians in there. And now maybe your kids are older. And so just making sure, always touching base with that estate plan, or creating one if you don't have one, now that we're in our 40s, to make sure that it's in line with your wishes and that everything is passing properly and everything's titled properly. And so working with an advisor and professionals to do all of this, you're at that point now where this is really critical, because this is where, we've started earning, we've grown some wealth, we're going to continue creating wealth. And we just want to make sure that we're positioned properly, either by checking with professionals or working with them ongoing, to just ensure that we're positioned correctly for the future. So if we can help you in any way, please feel free to reach out, but definitely get with your tax advisor and financial advisors and estate planning advisors to work with them during this critical time in your growth financially.